Hi, we're Summer 2019 EFDT team. My name is Yair Camacho, and I'm going to be presenting an overview of the code that we've developed based on Gordon's Day Trading Strategy 1. So this is the Expert Advisor, created from the MQL5 wizard. So here we have the trading modules that we've included here in the Expert Advisor. So for example, this is the closing trading module that we've created, which is right here. This is the code for it. So here we have this piece of code here. Functions based if no take profit is hit or stop loss is hit, but in a loss, then it should, but not in a loss, then it closes the open trade. But if, let's say, it doesn't take profit, doesn't hit stop loss, and we are in a loss, then this code right here, this block right here, will continue on to the next candlestick, 30 minutes, or the third candlestick, which is 45 minutes. And after the 45 minutes, it will close the trade, regardless whether it ends at a higher price level than where the trade opened, or at a lower price level than when the trade opened. Again, the limit is 45 minutes. That's the max. Here's the Fibonacci trading module that this is it. So let's see here. Okay, so here we have where we get the high from the previous day, the low from the previous day. We get the ATR from the previous day, the average true range, and then here we do the calculation based on Gordon's support and resistance. So for example, here we get the previous day's high minus the ATR, and here we have the previous day's low plus the ATR. Now, depending on if line 1 is greater than line 2, then line 1 becomes the 100 line for the Fibonacci line, for the Fibonacci retracement lines, and line 2 becomes the 0 line in the Fibonacci retracement lines. And the spread would be line 1 minus line 2. On the other hand, if line 2 is greater than line 1, then it would be the other way around, where line 2 is the 100 line, the 100 Fibonacci line, and line 1 would be the 0 Fibonacci line, and the spread would be line 2 minus line 1. And here would be the calculation for it. So for example, we have line to calculate the value of line 23.6, the percentage line of the Fibonacci of the percentage 23.6 would be the 100 line value, that was, whether it's this one or this one, minus the spread, whether it's this one or this one, times 0.764. That's how we get 23.6. And pretty much the calculation is somewhat same throughout each line, except the percentage variables are different. So to get 38.2, we calculate this. To get 50, we get this. To get 61.8, we have to include this, and 76.4, we include this in the calculation. So that's how we get the values for each one. And so out down here, for example, this block of code just means that when FIBO level 1, so when when the trend, so this is the line 23.6. So when the trend crosses the 23.6 Fibonacci line, it'll indicate that it's crossed, and when it crosses back down, it means that it's it'll indicate it as a 0, meaning it crossed it back down. And it would only trigger a signal when there aren't any positions open, when the current candlestick price level is above the 23.6 Fibonacci line, and it's indicated that we've crossed the 23.6 Fibonacci line. So here is the if condition statement, that when it's crossed, it'll equal 1. And here, if it's 1, that means it's crossed, and it's a good signal. And so pretty much the logic's pretty much the same for every line, for 38.2, 50, 61.8, 76.4. So this is the second line, third line, fourth line, and the fifth line. And here is the logic of how we're visually showing the lines, the Fibonacci lines in the chart. And so just to be clear, this isn't the final code, in the sense that based on the commenting, the style, and the documentation, it would definitely be changed to make it more readable and clear to read. So moving on, this is the support and resistance line. So very quickly, it's pretty much the same as the Fibonacci logic. So here, the previous day is high, the previous day is low, the previous average to range from the previous day. Line 1, line 2, line 1 is greater than line 2. Then line 1 is the resistance, and line 2 is the support. Otherwise, line 2 would be the resistance, line 1 would be the support. And based on those values, like the Fibonacci lines, here is the logic, so that when the trend crosses the resistance line from below up, it will indicate that the 11 is an indication that it's crossed for A and B here, so the resistance. Now for the support, it's this logic. So if it's crossed, if the trend crosses the support line from below up, then I'm sorry, I'm sorry, this isn't the if statement condition, it's this one. If the trend crosses the support line from below up, then it will make this variable into a 10, indicating that it has crossed. And this if statement condition and this if statement condition is simply indicating that when the trend crossed the resistance line, for this one for example, and then it went back down, it crossed back down the resistance line, then it will make this variable into a 0, indicating that it crossed back down. And that's this if statement condition is respective to this, and the same logic that's here is applied to here for the support line. So if the trend crossed back down through the support line, it will make the cross variable into a 0. So this is when it triggers the signals. So if the position if there's no open position and the current price of the candlestick is the difference between the current price of the candlestick minus the resistance line is above 0, that means it's going upwards, and it's crossed. So if it's crossed, obviously, if the trend crossed the resistance line, then trigger a signal, and the same goes with the support. It's the same logic for the support. And here's the logic for creating a visual of the resistance and support line in the chart. Moving on here, we have the RSI. So the RSI is very simple. It calculates so 0 means the current candlestick, 1 means the previous candlestick, and 2 means the previous candlestick, the second previous candlestick from the current candlestick. So this 1 is the current candlestick from 0, and 2 is the previous candlestick from 1. So what it does is that if it measures that the previous candlestick from 0 is greater than its previous candlestick, which is 2. So this one needs to be greater than this one, and the current candlestick needs to be greater than its previous, which is 1, and the current candlestick that we're in, the RSI value, should be greater than 66.6. And it triggers a signal when there aren't any open trades. The RSI condition is met, is true, then it would signal open trade. So for MACD, we've included here. We go here, also simple. It triggers a trade when there aren't any open trades, when the main line, the main MACD line is above the 0 baseline. The signal line is above or equal to the 0 baseline. The state is pretty much the difference between the MACD line and the signal line. If the difference between those two are above 0, it means that the MACD line is above or greater than the signal line. And the difference made here means that the current from the current candlestick we're in, if the MACD line is greater than the previous candlestick's MACD value, then it would be greater than 0. And what that means is that it's indicating that the MACD line, the current MACD value that we're in, is greater than the previous MACD line that from the previous candlestick. So that it's an indication that the MACD is increasing as the candlesticks are going, and together they would trigger a signal. And so finally, in the Bollinger Bands here that we've included, it's we have pretty much two algorithms that we've set here. One that I've created, and another one that John Paris created. So this is the first one, and so this is pretty much when the upper band here is going up, the lower band is going down. There aren't any open positions. Let's see, the previous candlestick's open is less than its closing price, and the closing price is greater than the upper band value. So that meaning that the previous candlestick should be going up and should be breaking through the upper band, and the current candlestick closing should be greater than the upper band. Then it'll trigger a signal. So as soon as the current candlestick we're in breaks through the upper band again, it'll trigger a signal here, which include true, and it returns a true down here. And I'll continue on with the part 2 of this video.